Hey everybody, welcome back. We have a ton to go over today talking about CPI, PPI, how that came in a little hot, what that means going forward, how we're going to plan for that specifically with the Fed meeting next week. And we are continuing to see a massive rotation throughout the sectors right now. We're going to have to talk about that. Clearly, we're going to talk about the Bitcoin names and what we see going forward, why we see such a massive divergence out there. But most important to me is not just the speculativeness we're seeing there. More important is what about the change in trend that we're seeing in some of the sectors and what has that led to in the past? For example, the spike that we're seeing in copper. We're usually told that that's supposed to be good for the market. So we have a ton to go over. Let's get to it. Now, this is a clip right from Barron's. Inflation picked up pace in February, likely troubling side for the Federal Reserve, which obviously meets next week, looking to see more progress on easing prices pressures before implementing much anticipated rate cuts. Yet we've gone from this period of time, it's a good time to talk about this, from having the most increases in history to us thinking that they've gone too far to getting 7 cuts. That's where we were, 7 cuts at one point, to maybe they're not going to cut as much, to maybe they're not going to cut at all, to maybe they're going to have to hike again is what you're going to start hearing. And I don't believe that. I'm going to just get that out of the way now. But I do believe that this could be higher for longer than anticipated with what we're seeing. But let's keep going through these numbers so you can see why CPI and PPI had such an effect on interest-sensitive stocks. The Consumer Price Index climbed 3.2% year over year in February, according to data set released Tuesday by BLS. Whenever I say BLS, it's just Bureau of Labor Statistics. It's just how they abbreviate it. So when you look at ADP, non-farm payrolls, and then you hear someone say BLS, non-farm payrolls, that's where it's coming from. That's faster than 3.1 set in January, economists surveyed by FactSet. Okay, prices growth to hold steady. Is it holding steady? This is from CNBC, and I thought that this was worth pointing out, and then we're going to get into an even greater breakdown of this because it's important to understand what's happening here. And I just think that this chart's just so simple and just points out the obvious. So what we're going to see is all items. Now, all items is the dark blue line. And what are we saying with all items? Well, here we just stopped, right? So if we go here and you go all items, and you can just see that we're just stopping. I'm going to say it one more time, just so you understand where we're going to go with this in a minute. All items. If we take out food and energy, because who needs food or heat or electricity? So let's strip out the things that we need. If we take out the things that we need, things aren't that bad. They're actually dropping. Okay, so what you're seeing is if I go from the same period in time and I just draw this line over and just do something as simple as that, right? What is that showing us? Okay, the all items dropping that don't have food and energy, right, are dropping faster. If we want food and we want energy, and there we go again, wanting things, you can see the problem, all right? So this is not dropping anymore. Now, people are starting to realize that after a period of time. January was supposed to come in hot for one very specific reason. January was going to come in hot because that they were going to very simply, in January, you go through all your contracts. I'm going to clean that off. You go through all your contracts, you reset all your contracts in January, and you usually get a higher number. And that's what the experts told us. Now, here we are month over month on the Consumer Price Index. And I just find it helpful to just point this out, and then you can see right here. Now, if you take a look at that going across, what are you noticing? Well, the one thing that you should be noticing is if we just take that right here, let me just light that up again. And let me draw a line. It'll be easier. You'll see where I'm going with this. Well, where have we been here? When have we really been here? January 2023, April, July, August, September, and then we were dropping. And again, what we've seen this whole time, and we're not really talking about the month over month price change as much, but I think we should talk about it. This has been going up since October. So since November, and Powell saying, hey, we think we're done for a little bit here, right? We're not hiking rates anymore is what he said essentially in November in so many uncertain circumstances. And what are we saying? All right, so we're seeing this go sideways. Okay, so we're seeing this go sideways to up, right? Because you could say sideways from here over, so you're in the same spot, and you've roughly been in the same area for a period of time. But realistically, you're going up. And we're going up even after they raised rates the way that they did. So are they going to have to raise rates again? I don't know. But you are seeing a massive shift. And I'll be really clear about that. I don't know. And we talk about this in regards to trading. One quick tangent. People that are telling you that they know what's going to happen in the market have no clue. None of us ever truly know what's going to happen. That's not what your goal is. Your goal is to make the best, to have the most information, and then make the best informed decision that you possibly can, and then go forward. That's your goal. Inflation ticks up again to a higher than expected 3.2%. Okay. Now, why are we looking at it from this perspective? Because this is headline CPI. All right. So let's just take that line again. And so you can just even see it here blown up. Very, very clear what's going on out there. Very little to say about it. Take a look at this. And I think they did a really good job. This was actually from Axios. And I really like the way that they broke this down. I think they did a great job with it. And what we're seeing here is gas, rent, and food. Headline Consumer Price Index is in gray. And we can see that. Gas, rent, and food. So they actually are breaking it out differently than just food and energy, right, which is core. Right? They're breaking it out, gas, rent, and food. Some people like gas in their cars. Some people have to pay rent, and people like to eat. So these are important. Excuse the coffee. This is going to be unedited because there's a ton that I have to go over. And I appreciate your comments about just keep them unedited and just keep dropping the education and information. It makes my life so much easier. So here we are, 3.2, 2%. All right, well, that's interesting. But you could say, but hey, this was so much higher anyway, so I can see how this would drop. Okay, well, we can see how it would drop. Sure, I mean, that makes sense. Let's mark that up there. We'll mark this down here. And we can see that if we were just to go, well, wow, I mean, that had a big move. Of course, that's going to drop. If we even did the simplest things and just came here, right, and we marked that drop off from that level, and then we said, okay, well, what about this drop from the gray area, right, coming across? You would see that right there. And of course, you can see the drop is substantial in gas, rent, food versus, the headline number. All right. So what is that telling us? It's telling us that the drop was greater, but you see this right here? And this is where, to me, the issue is becoming, where you're in this position right here where you've undercut. And since that undercut, now if you come straight across and you look from that level, you're not coming back from that. So what do I mean you're not coming back? You're not dropping anymore. Gas, rent, and food is not dropping. It's very simply not. And we've talked about this with rents, even in some of these hot areas. They're not dropping anymore. Rents are not really dropping. Gas is not dropping anymore. These issues are not going away. And this is becoming a problem. Now, this was seen here. And if those that don't know, these lines demark where the algorithms were in within the first 5 minutes of the 8:30 price when CPI was released. And I think that's important just to note for those that are newer, that are following along. And then if we come along right in here, this is PPI. Now, PPI to me was more important than CPI. And I know people are going to be like, well, why would you think that? So let's just walk through the way to look at the world. CPI here is what we're paying for goods and services. All right. This is what we pay. Consumer. PPI, producer. That's what they pay. So picture that you want to buy, I don't know, you want to buy a slab of concrete or you want to buy a cheeseburger. All right. This is them buying the cattle feed over here to make the cheeseburger. Think of it that way. You can come up with anything. Let's say you wanted to buy a block of concrete for some reason, right? You just want this slab of concrete. Picture this is where this is the cost of the sand. If you think about it that way, right? This is the ingredients. This is the hamburger. Let's leave it at that. I'll get away from my concrete slab analogy because people will be like, "What's he doing? Why does he need a concrete slab?" Anyway, if you take a look at this. This was the move. If you really look at the market, right? Why was this the move? Because if their costs are going up greater than what they're charging us, that's a pickle, okay? Why is that a pickle? Because it's not like down with demand. It's corporate profits are going to drop. If corporate profits drop, what happens to earnings? Earnings drop. What happens if earnings drop? PE contraction. Or so we get a PE contraction, and then they're not going to cut rates, and rates are not going to drop because of this, right? Okay, so rates are not going to drop because things are more expensive, and they're more expensive on this end, and they're not able to pass through the costs of the goods to make the ingredients for the cheeseburger to us. What does that do? Drives the PE down because yields go higher, right? So then you get into real rates. We've had this talk before. If you want me to do a refresher on it, I'll do it next Saturday. But you remember real rates in comparison to the dividend yield and earnings yield of the S&P? That's a big thing. And that's how pension funds and institutions, that's how they weigh where they're going to put their capital. Bottom line, and just the real quick and dirty way to look at it is this. I'll clean this all off for a second. Is just to take a look at where the 10-year is and take a look and go, okay, well, this is where the 10-year is and this is how it's turning, right? And yields go higher. If the yields go higher, the PE of the S&P, just think of it that way, it contracts. All right. So if this goes higher, meaning yields go higher, right, then the PE is going to contract of the market. If the PE is going to contract of the market, you have to love rising wages. They usually end in tears, right? So what does this mean for us? Well, this means that if the PE contracts, meaning the P shrinks, right, because of you're going to go out there and buy bonds, and then the E contracts at the same time, well, it just means that this is going to drop. Okay. All right. So now let's just take a look at the PPI super quick. Now, I believe in just quoting where I'm getting things from so that you know where they're coming from so that you can go and look them up yourself. So this is just a headline from Bloomberg. U.S. producer price jumps adding to signs of persisting inflation. Core and broader measures exceed estimates for modest rises. That's one way of saying it. Economists parse PPI for inputs into Fed's preferred gauge. Just so we're clear, PPI is the leading indicator, not CPI. CPI is the headline that we react to. Remember just a couple moments ago when I gave you my awful analogy of the concrete slab and the cheeseburger, they're a little more eloquent here. So I thought this might be a little more helpful to go through. The PPI, Producers Price Index, which measures the pipeline costs for raw, intermediate, and finished goods. Raw, intermediate, and finished goods, right? My ingredients, my concrete, my sand, jumped 0.6%, double the Dow Jones estimate. Jumped 0.6 on the month, double the estimate. Not like a little bit, doubled. On a year-over-year basis, the headline increased 1.6. Let's get my little circle here and see if we can pull this off. 1.6, we can't pull it off. Let's move on. The biggest move since September 2023. Two-thirds of the rise in the headline came from a 1.2% surge in good prices. Two-thirds of the rise in headline PPI came from a 1.2% surge in good prices, the biggest increase since August 2023. It'd be really cool if I got an economist on here to explain this stuff much better than me. Just a thought. Comment on that if you think it'd be interesting for me to have like guests on that are bigger experts than me in some of these fields. I think it might be a good idea to explain some of this stuff a little more eloquently than myself. Retail sales have increased 0.6, less than expected, while weekly jobs nudged lower. No one cares about jobs right now, which is fascinating. When I first started trading, everybody cared about jobs. That's all we would stare at was that weekly number. It's so interesting how it moves over time. The PPI, which measures the pipeline cost for raw, intermediate, and finished goods, jumped 0.6. We were looking for 0.3. Dow Jones comes in at 0.3 increase in January. That's what's so interesting. All these contracts that were supposed to be done, all of them were supposed to be in January, year-over-year basis, 1.6, the biggest move. Oh, I almost got it that time. There it is. Boom. 1.6 since the move September 23. I can't stress this enough. PPI is considered a leading indicator for inflation. PPI is considered a leading indicator for inflation as it indicates costs early in the supply chain. We just went through that. I won't bore you with the cheeseburger analogy again. The BLS reported that two-thirds of the rise from 1.2 surge in good prices. Yes, I'm repeating this stuff over again for a reason. As with CPI, the acceleration was traced to energy prices. As with the CPI, the acceleration was traced to energy prices, which saw a 4.4% increase in the final demand measure. Gasoline prices jumped 6.8% at the wholesale level. Wholesale level, okay, so that would be like Casey's, C-A-S-Y, Murphy's, M-U-S-A, right? So you're going to see how we're going to tie all this into where the money's going. And this just points out the chart, and this is from the Bureau of Labor Statistics. Now, where did I get this from? I got this from a site that is Trading Economics. It's a free site. You can go there yourself and grab it. But this just highlights everything perfectly for you, right? It's real simple. I mean, I'm not going to even have to draw the line. You can see it yourself. All right. So again, this was what we were just looking at the tape. Everyone's all giddy to trade. And what comes out? 1.6. What are we looking for? Well, the previous was 1, and we were looking for 1.1 year over year. Do you think that's an issue? It's an issue. Now, if you just take a look at this again on a chart over a longer period of time, on a month-over-month basis, this tells you why you have an issue. And this, to me, was, as people like to say, and I'll just repeat it, absolutely glaring. So let's get rid of the circle. I think we've had enough of the circle and my nonsense with it, haven't you? So if we just take a look right here, you see the level. I mean, it's not rocket science, guys, right? I mean, it seems like a pickle, right? So let's get this straight, just so we're clear on what the issue is, so that you can understand the issue. This is when Jay Powell in his infinite wisdom goes, maybe we went too far, competing for mortgages with, the average homeowner. And then this is what he does, where he's raising rates the entire time, right? We're gonna get this inflation. We're gonna get this inflation down. We're gonna get this inflation down. Does it look like he did anything? Now, clearly he did, but this is a pickle. And it's a problem. It's definitely an issue. All right, so now we know what the issue is, and now we have to go back, take a look at the ES, and we can sit here and finally, on these weeks, I can say to you, okay, what do we do about this? Well, there's a couple ways to look at this. The best way to look at this is how are various sectors being affected by this, and then how do we profit from it? So now that we know what the issue is, we know that we're going into the Fed meeting next week. We know how all this was affected by the Fed. I can show you that very quickly. But what's going on here and what is the underlying driver of all of this? Now, one of the core issues that we've been dealing with and people saying, well, this is why energy prices are dropping is because they're dipping into the SPR. And the SPR is going to be a huge issue for us. And, we have to worry about our safety and everything else. All right, this is where we're at right now. Okay. And weekly U.S. ending stocks on crude. Weekly U.S. ending stocks of crude oil in SPR. Look at what's going on here. Weekly U.S. ending stocks of crude oil in SPR. Thousands of barrels, okay? Look what's happening right here. Why is this happening now? Why are these names turning up? Now, we've all seen these horrifying charts, but let's talk about this because we're going to take that EIA data that I just showed you about the weekly stocks, crude oil, and then I want to tie it into days left of what we've been told. Days left in the Strategic Petroleum Reserve. This is by the U.S. Department of Energy. Looks like we've got the square. All right. And what we're doing is I'm using an older chart that goes back to September 28th because this highlights the issue. And then I'm going to show you what's been happening. So hopefully you follow that. All right. So here's the average, right? They don't do a great job of highlighting it. For some reason, they want to use this yellow. But here's the average. Here's where you're at. Okay. So we're all hearing this. We're going to be at zero. Conspiracy theory people really weren't that wrong. If you look at where we're at, so you were at 17 days in September. All right, so this is not sustainable. And we all understand that this is not sustainable. And we all look at the time and when this happened, which was September 22nd, 2023. All right, so we understand when this was recorded, we understand that 17 days left and that we were in, quote, emergency time. So we had to, quote, use this and take it to an average that I haven't seen in my lifetime, period. All right, so let's get to it. Now, in front of you is the SPR on a 5-year chart right here. And what I'm using Y charts. It's a good product. I have no affiliation with them whatsoever. I just like their charts, so I'll tend to use them sometimes. And what are we seeing right in this area from that graph that I just showed you? Well, you're seeing an uptick in the SPR. We can't go past 17 days. What are you going to go down to? 2 weeks, a week, 3 days? We have 3 days of oil left. So here you are on a 3-year basis. And what are you seeing around the same period of time? Let's highlight that so that you can see what I'm looking at here, right? So we can all see that right in here. Okay. And what is that going to do for us? Well, that's going to tell us that we're seeing a change in trend. What are we looking for as traders? What are we always looking for as traders? Change in trend. That's what we're looking for. So all of this, right? All of this got us what? Got us a decrease in CPI and PPI pricing. So this is the question. You can comment below. And this is, again, everyone thinks I'm out because I live in Miami currently and everyone thinks I'm out partying and I'm actually sitting here looking at SPR on a weekend night. So here's the question. I find this fascinating. How much did what Powell do affect the market? And how much was it just depletion of the SPR, right? So like you start thinking about it and going, well, look at this curvature. Look at where we started to bottom out. Look at where it started to pick up. And look right around the area that you started to see an increase in CPI and PPI. Look at the data we just looked at earlier and how they're talking about what the issues are. Well, you don't have any more SPR to lower it anymore, right? And now they're refilling it because they really don't have a choice, okay? Because you can't go to zero. So, well, you can, but you can't. So here's where we're at. You certainly can't do it in an election year, could you? So this is where we're at and look at what's happening. All right, then you go to year to date and it's just glaringly obvious, as people like to say. What I'm getting at is that this is the crux of the issue. And this, where we're looking at 17 days, this is right around about 4 weeks, 5 weeks later. What did we have? We had Powell's speech. We're not going to raise rates anymore, right? Or alluded to the fact we're not going to raise rates anymore. What's happened since then is that weekly U.S. ending stocks of crude oil and SPR are starting to curl up, according to the EIA. So that puts us here looking at the ES again on a weekly basis, where we're not having the same kind of move. Now, the thing about the ES and where we're going with all this and how we're going to profit from this is once we understand all that, we can look at the NASDAQ and go, oh, well, this makes sense. That's why the NASDAQ is taking out a lower low. Well, when was the last time the NASDAQ took out a lower low? Well, if you take a look at January 2nd and you have all that dumping, right, all the cap gains, and we get past that week, and then we go forward. And go, when was the first week of the year that we've had a lower low on the weekly chart? Well, welcome to the party, because you just had one, and you haven't had one before. And so now we have to look at this and go, are we going to hold? Or are we not going to hold? Well, if PE contraction is going to exist and rates are going to go higher, the chances of this holding are not as great as they could be. Earnings were good. And earnings in some companies were exceptional. And I'm not suggesting that we're going to see this correction, but we're definitely seeing money go to other places. Nobody knows if there's going to be a correction, right? That's not really our job to sit here and pontificate about what's going to happen. What we do is analyze what we just did. We take that data and then we utilize that data to make more informed decisions, right? That's what you do. And that puts us in a situation where you can find ideas. For example, this is something that we just recently bought in the community, and I think we're up 70, 80 points in it already because we know that this is probably where we're going. And so I'll show you how we're able to identify the flow of money. To start, we are constantly hearing from people that say, when copper goes higher, the S&P goes higher. Well, copper's going higher. I don't think we can get a better reading on copper than that, right? This is copper futures. And then we take a look at the ES on the week. Right? Does that look like that is something that's an accurate statement? And possibly it's because we have to watch the rotation. So now we look at the gold, we look at this for a second, and then we go and take a look at gold. And we can see how gold is breaking out as well. I mean, that's a massive breakout on gold, right? That is massive. So is gold going higher because of inflation? I think yes. I actually think that if we start looking at this and we watch the great runs that happened in gold, or we watch the great runs that happen in Bitcoin, I think that where we're going with this, where we're looking at these Bitcoin runs and we're saying this is predicated upon what we're seeing, these ETFs and Michael Saylor and people coming out and saying Bitcoin's going to infinity. I'm probably not going to infinity. I'm going to go out on a limb there and predict. But if we take a look at this, is this moving because of the ETFs? You'd have to say, sure, some of it absolutely was. But then you start going and thinking, well, when did this start upticking? Well, mid-October. Well, that's kind of interesting. Mid-October. See anything else uptick mid-October? When did the SPR start to turn? And when did they start filling the SPR again? All right. So when we start looking at this and we start trying to connect the dots, you actually take a step back and go, well, that's why this stuff's moving. And so once you understand that, now you start diving into it. So you have to put all those pieces together, because once you understand that, then you understand what it's going to take to not only get in these, to stay in them, but what fundamental change that you're going to have to see to get out. Now, what we do is we dive into this and we see, are there other signs that this is what's happening? And we see the tip right here. And what tip is Treasury inflation protected securities, right? That's all it is. So they're inflationary bonds. And what we're doing is just taking nominal yields and dividing them by it. That's because that's a nominal yield ETF. Going to need way more coffee today. So if we take a look at this, what are we saying? All right, so this is on a yearly chart, and then we're going to drop this into a 4-hour, and we're going to blow this up, and I'll get rid of the pre and the post. What are you seeing since 24? Right. So we can see October, we're just a straight free fall from when he spoke to what are we seeing in December, January, and from here. Well, when we start to look at this stuff, this is why I love comparison charts, because it's just outright facts. And when you see this stuff, you can't really unsay it. Now, when you look at it, that's pretty clear that people are buying tips to protect themselves against inflation versus what we're seeing that they're buying in just nominal yield treasuries. Now, in front of us is the Thomson Reuters Core Commodity CRB Index, a really long name. I'm using a 4-hour chart because the 4-hour chart is actually highlighting really where we're at and what's happening. All right, so here's September to October. Well, what do we note here? All right, so we can see that peak. Interesting time to peak, right? Right around what? That SPR again, right? So, okay, so that's when you peak and that's when you've really hit that high. All right, but then we start selling down. And why are we doing that? Well, we're doing that really because of what Powell's coming out and saying, and we're going to cut rates. He didn't really say we're going to cut rates, but he was saying we're leaning that way. In December, this is what's fascinating to me. This is really where he was talking about, we're looking at 3 rate cuts. Fascinating that he even actually said that when you really look back at how this is playing out, that he probably should not have said that, right? All right, so then we look at these levels and go, well, this is really the only period in about a year, if I go back, where you're really there, right? That you're actually over. So you go 23, 24, and what was the only time that you were higher? It was right here. Other than that, commodities are breaking out. So we're watching commodities break out, right? So what does that mean? XLB, right? So then you're looking at the XLB index. Okay, and we're seeing how that's going. Well, that's moving. Well, what's a very large percentage of that? Largest percentage of that is a company called Lind. Okay, it's a company that's non-US based, but that is Lind, and you can see how that's going. Well, what else is going on there? Well, copper, we saw that moving. What's going on with FCX? I'm going to leave these in lines for a second because I'm using it to denote the point. Okay, you've gone from 88 to 102. Is it possible that we're out of position? Is it possible that inflation is not going away? Is it possible that these rate hikes didn't do what we think it did? And is it possible that it was just very simply the SPR, since that was a very large percentage of the gain? Energy prices were 60% of those numbers, if you remember. If not, you can just go back. But what I want to do is I want to stay with this so that we can just keep going and you can understand, what is the next move? Where do you go with this? Well, I think you go with this and start looking at what does the USO say? All right, so here's the USO. And this is the United States Oil Fund. And we look at the USO over this period of time, and I'm going to stick with a 4-hour chart. And then we go, okay, well, here's the USO divided by the SPY. And what's that telling us? Okay, well, that's not really saying much, is it? Or is it? Depends on how you look at it. To me, I think it's telling you that you're setting up for a breakout. Now, how would I look at that and see that? Well, a couple different ways. I'd go head, and then I would go left shoulder. I'm not here to argue, guys. If you're going to tell me that's not a true head and shoulders or an inverted head and shoulders because it doesn't have this or that, right? What you're looking for is patterns, and then you're looking how we act at those patterns. For me, it's very simple that you were hitting lower lows, and now you're hitting higher lows. Okay, that's all it is. That's all head and shoulders is, lower lows, and then you're doing what? Higher lows until you hit a level, and then it makes a decision, right? You're at decision time. And from my perspective, if you're filling the SPR, which means now you're competing with the U.S. consumer as well, right? As oil comes in, how does this not start going higher when you start connecting the dots? And really what this has me thinking is I start thinking about how much time I'm spending on AI and those types of things. And I think that I'm right in doing that. But let's start clicking through like XLE and the SPY. And what are you seeing here? Okay, well, here's 2024. And I like using these line charts because I think it really hammers it home versus just looking at these candles, right? So we're going to stick with these lines while we're looking at comparisons and keep it on a 4-hour chart because the 4-hour chart's really highlighting what's going on out there. So I had a breakout here. And if I was to look at something as simplistic as this and just drop a 55 on it and then put the 22 in and then just put the 12 in, I got to change this. We're converting everything to dark mode because that's what the comments are. And do me a huge favor. Let's drop a 200 so you can see this. Isn't that convenient on the 4-hour? Look where you stopped. All right. So now you can see what's happening here. Please share this video. There's a lot in here, and I think there's a lot that people need to know. I purposely do not run ads. So if you can share this, it does play with the algo because I don't do that. People will always say, well, how come you don't have more followers? I don't run ads in the middle of these specifically so that you can just get the information and you'll never see me do it. But I would appreciate if you share it because that's why I do this. People ask me why I do this all the time. It's so people have the right information so they can learn what the street actually knows, right, when they're looking at this. But let's just keep going and rocking and rolling. All right, so let's look at the oil services names and see if we're seeing anything there. So this is the oil services names divided by the SPY. I'm going to go take a look at 24 December, same thing. We're breaking out there. How about the exploration names? How do they look? Are we seeing a similar pattern anywhere? Yeah. And the exploration names are continuing to push. Okay, so what are we saying? We're seeing money flow into where? So let's go take a look at XLB and divide XLB divided by the SPY. Okay, so we can see that very clearly, right? Okay, let's take a look at XLK, which is tech. Okay, so tech versus the SPY is underperforming. What's XLB look like in regards to XLK? Okay, so if we started in February or March and we started buying XLB and started selling technology names, just for point of reference, if you take a look at this, February 9th, we're just taking the trough to where you're at 10%. That's kind of interesting. If you take a look at energy and you divided energy by XLK, what is that telling us? Okay. Well, it looks to me like we're starting to see a breakout, right? Where they are doing what? They are selling tech and they are buying energy. And then you go back to here, and I'm just going to pull this back for a moment and go, when was the last time we saw something similar to this? Okay. So this is becoming an issue. And I don't think that this issue is going away anytime soon. There's some other comparisons that we can look at. I think the biggest ones for me are just taking a look at energy. And I get it. Like you're saying, well, you're trying to predict what's going to happen here. I'm not trying to predict anything. I'm telling you that what I think is happening is that SPR had a greater effect on the market than we thought it did. And there's a couple other signs of this, but I'll give you a couple more. So if we go here and just look at this, and this is called, I think this is Gold Bugs Index. Do this on a 4-hour chart, and you can start seeing that breakout right here. And then if you take that breakout here and you start taking a look at the SPI divided by it, what do you see? Okay. So you start to see a pattern here, right? And take a look at this turn that you're starting to see here. So they're buying the gold bug index, okay, versus the SPY. It's outperforming since when? Since about January, and then you see the same movement right around that period of time. So it's not like other people aren't realizing this and they've been acting on it. I'm not really a gold bug. I mean, people know this. I tend to really not play those because I get bored very, very easily and I don't have the patience. But you can see how this is turning. If we were to go and take a look at some other, very quickly, before we get into some names here and what we saw on Friday. Now, this is just the dollar on a 4-hour. And how does that look? Well, people would say that, well, from my perspective, I think that that's telling you that you're not going to wind up pushing. I don't know. I don't look at it that way. I see that you're actually setting up here, right? You may be setting up to go higher, and then you would say, well, how do you see that? If I'm to go here and go, okay, well, you have this right here, right? You can see area, how we dropped. And then if you just take a look at this, right? See it? All right. So here we are, and what are we doing? Well, we seem to be hitting lower or higher lows. All right. And then you come here and you're going, well, if I look here, what are we doing? We're hitting higher highs. All right. So I think there's something to this, and I certainly think it's something that we need to be fully aware of. If I overlay this and then go take a look at the 10-year, I think going through this is way more important than me pulling up charts and showing you charts this week. I think it's really important for people to get this, because I think this is where the next turn is, and you're going into Tuesday, and I think you need to know this. And then we start looking at the 10-year. Does that look like it's going lower, or does that look like it's going higher? To me, that looks like it's going higher. All right. So now we have this all mapped out, and we know what we're supposed to be looking at. Now let's just drop this in the candles, and then we're going to just go look at the most simplest of things. Here's MPC. Watch this on a weekly chart. Okay? That is a massive breakout on MPC. Massive. On Marathon Petroleum. I can't stress enough, when you flip an upper channel, that's when things really start getting very interesting. VLO, okay? That's when these things can go, quote, parabolic. Take a look at these names versus names like Arch, okay, that are imploding. So it's coal that's coming down. Well, why would coal be coming down? AMR. Well, clearly we need natural gas too, right? Okay. So none of these look anything like this chart. Let's get rid of crude or get rid of those lines. None of these look anything like crude or copper or gold or Bitcoin. None of them, right? So the issue to me lies in oil. Let's take a look at Exxon, which makes up the XLE. Right? Does that look like it's going down? I mean, here's one that we bought at 56. This is the easiest trade in the world. Hold on 1 second to clean all that off. But every time this gets down here, you can just actually remember this. Every single time you get down there, you have a buyer that's trying to buy 50% of the company. His name's Warren Buffett, and that's all he does. He just waits for it to get down there and he picks it off. It's literally probably one of the easiest trades out there. But eventually it will lift. I personally think it takes it private eventually, but that's another story for another time. You see where I'm going with this? And then you go look at Casey's. Well, why can't that lift the way that it was lifting? How about MUSA? Okay, so you see how this one's setting up to break? See, these all have different ways of getting oil, and they can have different negotiations. But look at that. Look at the hammer, all-time high close. So when you start to see this stuff, it becomes way clearer than looking at something like NVIDIA right now, right? Which maybe that goes higher next week. Maybe it doesn't. NVIDIA has that big conference. I'd be remiss if we're not talking about that. What I'm trying to get you to understand is that we're seeing a major shift. And if we look at that shift, we can start diving into these names like RIG and say, wow, that is kind of turning 1, 2, 3 weeks up. You do have an interesting little spot here, don't you? Okay. And you have your other little sectors that are starting to turn, that are starting to see a little bit of money. I thought this was kind of fascinating that even Doug Cass on gold on pot names is coming out and being somewhat prophetic about it. On the financial side, he's really not someone to play with. I mean, he does kind of understand what's going on. And if we take a look at this on MSOS and we look at that move, what I thought was pretty cool about this was this. I just want to get this out while I'm thinking about it. So most of these are scripted. And then when I have these thoughts, I want to get them out because it's just the way that my mind works. So we just have to deal with it. And again, please share these and comment. This video took hours to put together. So you look at these levels right here, right? It might not seem like it, but it does. So what do you have, like 5-6 days that you've ever had volume like this on MSOS? And I know you can't see that because I have to convert all this over. So we're going to drop back. All right. So there are things that I'm looking at. And okay, let's just take a look at something else that we're starting to see. Because we were told the consumer was strong, right? The consumer is strong. Does the consumer look strong right now? When are you starting to see that turn in the consumer? Looks like it started March 1st. What's happening with CPI and PPI? Retail sales weren't great either. So then we just do the most basic of indicators. Let's just drop the 22 there, which we cracked. You start looking at the 55, and you're basically hanging on there by your fingernails. All right, so I use a 12, a 22, and a 55. You should use what you're comfortable with. You look at Ulta, right? You ran right back to what? The 22, and then you rejected. People love this name. Probably does hold. But what did we see here with the ANFs? We started to see a different kind of change after earnings, didn't we? All this is alluding to a massive shift. And what I would do is I would watch parts of this video again, specifically what we're dealing with the shift and what is happening in oil. I think that this is a key component going into the Fed meeting this week. That's it.